Hi, good evening. This is Simon with Trade and Perform Coaching, and this is a trade review for both last Thursday and Friday. I have not done either one, and I want to get to them today because I would like to focus actually on the importance of consistency in trading and how one poor day actually led me to having not a second poor losing day. Friday was actually a profitable trading day, but I left a lot of money on the table. And just how a series of poor decisions, even for a veteran trader, can leave one making small mistakes, and what I do to kind of get back on track, and of course to also do the trade review. Just a quick legalese. This is for educational purposes only. Nothing on the Twitter stream, in the blog, or anything else I post is to be considered a trading recommendation. You can lose all your money trading futures. Please consult a qualified investment professional before making the decision to begin trading. Okay, so let's jump into it. Let's kind of go into Thursday here. And very interesting. Now, Thursday we were trading pre-market, and very close prior to the open, we were trading at 1688, and we came all the way up to this resistance. And I had a resistance point right here at 1699 or 1700. And I was looking for that to get filled, possibly get filled on the upside push, and then come back in and attempt some kind of gap fill, or half gap or gap fill, one of the two. And there were several things I wish I had done just slightly different on this particular day. And the first one would have been I had a wider zone than normal that was in the notes that I posted prior, or in the trade zone. I wish I had brought it back to 1690, considering that the gap fill was 1688. So mental note of the zone. I just had a bunch of data in there, and it was really, when I make a zone wider than normal, it's because I'm getting conflicting data. And you can see they tried to hold it up right here at 1691, and then they flushed it to the back of the zone, and they tried to hold it up there for a good 15 minutes, 15, almost 20 minutes before they flushed it again. So in the morning, so one of the points of the rules and the zones that I follow is that I don't do so much thinking, okay? And because thinking really gets in the way of what's going to happen, I immediately decided that the market should come up and test this area, and therefore I avoided taking this trade the middle to the back of the zone. Now, had this been the white zone here, I wouldn't have hesitated taking the short. And usually the first zone when we gap, unless it's an open drive higher, and you gotta consider, we're already coming from 1688 almost to 1698. It's almost it's an 8 to 10 point gap, which is healthy. Okay, I'm not a big fan of automatically fading gaps, but in this particular case, I didn't, and that was I'm not too critical of that decision. In that case, I'm all right. We could have, I still think, easily gotten an additional push. One of the things that's really interfering with my trading right now is the summertime pace. The summertime pace is simply slower than all the other times of the year. If you'll go back and look at March, April, May, you'll see that the opening ranges were 2, 3, 4 points of opening range in the first 5 minutes at times. And we're getting lucky if we're getting 2 points of range in the first 5 minutes. And so the slowness is throwing me off a bit. The zones are obviously still effective for me, but they're causing me to make adjustments I wouldn't normally make, and that can be a challenge to a lot of traders. So if you look, I took this zone, and I believe I actually took, I don't remember where I took the trade. It was either 1690 or 1691. Either way, I had it come in here, and I got stopped out. Another major error, I missed the zone right here. I usually get it right, and when I get it wrong, I'll just come out and say it. I missed, critique myself, I missed this zone. There's clearly a support level here. So we flushed underneath the white zone. So this is the first stop I took, and then if you'll look, I took on NQ, I took this trade, and it's really seared in my mind at 31.17, and I tweeted it out, and I had a 5 point stop on the trade. And so that was my second error, because first of all, my stops are usually from the back of the zone here. This zone, again, was wider than normal. And I think that was just an effect of summertime. I based some of this zone based on the overnight activity. And I think because of the light volume, it's getting pushed around more in the overnight session. And so I took it at 1317, and it just flushed through. They had an additional flush. I really think all of this whole push down was algorithm driven, but it doesn't matter. The fact is, I usually have a 5-point stop on my trades from the back of the zones, and I didn't this time. So I didn't put the trading appropriately, but even if I had, the stop would have come here at 3110. Either way, I would have been stopped out of the trade. And at that point, I have 2 stops. So my concern at this point, trading-wise, and it's a decision that a lot of traders need to make, and you have to decide, what is your average P&L on the day? What is your average number of losers in the morning out of any given, let's say, 50 series of trades in the AM? How many times do you have 2 stops back to back, and what usually happens after that? And when I look closely at my data, I know that when I have 2 stops in a row, that I'm very likely to have a 3rd stop in a row. And that can be extremely, extremely frustrating when that happens. Furthermore, I trade my biggest size early in the morning, usually in the first hour. Okay, so I'm already taking max stop outs. And so I don't want to lose more on any one given morning than I normally do, than I can normally make, because it already means I'm going to be working for free the following day, or at least part of my day is going to be working for free. And psychologically, that really messes with me. I hate it. I don't like it. It's not good. I'm agitated for 2 days. I'm going into the weekend. I certainly don't want to take one bad day. I've already taken away a little bit from my week, but I'm still positive. I don't want to take one bad morning and turn it into I'm still positive on the week to I'm down on the week. Now I've worked 5 days for free, and I put a lot of time into this. So the next thing that I do, the next point in my thought process is to stop. Okay, and so then I go and look, well, what would have happened the rest of the day? Well, on this first move up into the zone, we actually got perfect rejection on NQ, and I actually would have made my 5 points on this trade. Okay, so that would have been 2 losers, 1 loser and 1 winner on NQ. I'd still be down on the day. Okay, this would have been the second move. I generally don't take the second move in. However, if we look back over here on ES, and I'm almost up for the amount of time I want to allot on this day. Okay, I never got a rotation back up into this zone, and had I taken the short here, this would have been the first move back up into the white zone, which I would normally take. I'd have gotten burnt here again. So I'm still down on the day. As a matter of fact, I'm down at a new low for the day, even with the winner over an NQ. And then the rest of the afternoon was just chop and crap, and there was no reason to be trading this. I don't see why anyone's fascinated with the afternoon. So bottom line was I was down. So that wasn't the big deal. I followed my trading rules, and I'm only down a little bit. I'm up on the week, no big deal. But if we come over here and we look at, let's come over here to the, well, if it'll let me. Okay, and if we take a look at Friday. Okay, so Friday, I hated where the market opened. I would either liked it to open down here and reject out of pre-market resistance, but it drove right up over just prior to the open. And so I didn't get the move down into the 1690, which would have been an automatic long for me, even though I hated where we opened. You're always concerned that you'll get a replay of the flush. So what was going through my mind now is, first of all, despite my preparation, I was concerned about a flush through. Even though I was willing to take a trade here, I was apprehensive. So I already have a little fear going into me. And then we get gap fill, and I'm not ready to short just yet. And this is looking extremely strong coming into the open. So then this is the area where I am watching for a pause. Normally I would, or very often I guess I'd say, I'd go ahead and place an order in the middle of this zone. And I watched it come up and reject first time, and then I watched it come up and reject a once and a twice over a 10-minute period. And I didn't take the trade either time. And I attribute this to me simply looking for security that we were going to reject. However, I'm not, even though we kind of got these mini, what I call mini railroad tracks here, I'm not willing to take a trade once we're out of the zone, and I'm not willing to chase. So already I've missed my first trade. I didn't get hit here. And then I kind of, I was apprehensive and I tweeted out, I'm not taking a long on this first move into pre-market resistance. Well, if you look, we came into pre-market resistance, we came halfway into the zone, and we rejected back out for a beautiful 2 points. That's my target. So at this point, I've already left on Friday 4 points on the table. I didn't, obviously I'm not short through here. We flushed through the zone on the second time through. And then we come down, and if you look, the first time we just tagged the top of the zone, and we get a rotation up for 2 points. Perfectly, 86 to 88. Whether you could have gotten filled on both ends of that, questionable, but there were certainly 7 ticks there, if not 8 ticks. If we come down and we take a look then at this back end, I said and I tweeted out, I'm looking for an extreme tick or tick divergence, of which I got neither one, okay? But at this point, I should be long on this trade anywhere from the front of the zone to the back of the zone, usually with, like I said, a 2 to 3 point stop behind is what I usually use. Now, that's not what I'm saying you should use as a stop. Every trader has to understand what their risk parameters are, not only for their own capital, but also for the trade they're taking, and figure out, well, is the risk that's required for the trade doable in the trading account that I have? Okay, and if you don't determine that long before you get into the trade, you will become one nervous wreck and you'll find yourself making a ton of errors. It can truly, truly suck. So I can't tell you how many traders I spoke to that I have coached in the past, and they told me, well, they got stopped out here. And when I talked to them, they said they simply had moved their stop tighter. Now, why did they move their stop tighter? Because the volatility had increased and they didn't want to take a big stop. But the truth is, with volatility, you have to go just the opposite. When volatility expands, you have to have larger stops, if anything. So if your stop, for example, in my case, if I don't want to take any more than, let's say, a 2 point stop, that's the maximum I'm willing to take. Well, then my limit order needs to be sitting here at 1684 so that my stop is at 1682. Okay, I can't take it at 1686 when I know the back of the zone is 1684 with a 2 point stop, because all that's going to happen is it's highly likely it comes to the back of the zone, stops me, and then goes and hits my target. So again, part of it's just simply the mental preparation. As a matter of fact, all of it is the mental preparation for this thing. I can hand someone my exact trading plan for the day, tell them exactly where I'm going to enter, exactly where I'm going to exit, and day after day make money day after day. And my guess is that only 3 out of 10 people would be able to follow it. Why? First of all, you have to be able to trust the person implicitly that you're following, that they know what they're doing. And secondly, you have to trust yourself. Okay? And when you're trusting someone else to give you a trading call, okay, if you can follow it blindly, that's great. But each and every time you're going to have anxiety if you don't understand exactly how that trader comes up with those zones. Okay? And then even if they can come up with those zones, if you understand it, how do they execute? And what are their parameters? Can you handle the stops that that trader can handle? Is the trade appropriate for you? All these things can mess with your mind in a terrible way, and you can take a winning trade plan and turn it into a losing trade plan. So I'm going to pause this because YouTube only allows me to upload 15 minutes, and I'm going to do this a second time, and I will upload both, and hopefully we can finish up the second part in 5 minutes. So I will be right back.